Alright, let me start with the gold trade I took this week. I also posted this in my channel. The reason I took it is because there were a lot of unbroken lows in this area. And as we all know, the market moves because of supply and demand. That's the main driver. Some people say fundamentals drive the markets. That's true, but in the end, people need to enter orders to push the market. So it always comes back to supply and demand. And when you analyze a chart, it's important to check where a lot of supply and demand is lying, where a lot of liquidity is, because unlike retail traders, big players need liquidity to enter a market. We can just enter whenever we want, wherever we want. But if you have a lot of capital, this is not the case, because you will push the markets away and you will easily lose some money. So step one for me when I open a chart is always to look at liquidity. Where is liquidity? And the two main areas where there always will be liquidity is above swing highs and swing lows, mainly on the daily chart, and above and below ranges, just like we had in gold. So as you can see, this blue box area had a lot of lows. And let me mute some of you guys. Yeah, so as you can see, there were a lot of lows in one area. And you have to imagine that once a low doesn't get broken, just let me illustrate it on a chart. It's important to look for important lows to the market, just like this one. Why is this important? Look at the reaction after this low was made. It's a very big move, and this cannot be caused by retail traders. This is someone with a lot of money entering a long position over here. So I mark these levels out. I draw a white line, just like I did here. And then I watch what the market does once this line gets hit again. And as you can see, we got a few touches above, but we did not break this low. And then eventually the low got broken, but quickly rejected. And what this indicates is that the big player that was trading over here was still actively watching this level. He has been accumulating over here, which means he has been scaling in his long order. Then once this level breaks, there is a lot of liquidity, because you have to imagine that this is a very big support level. And what do people do when support breaks? They sell the breakout, which means if they sell, they need someone that buys from him, and that's the bigger player. The bigger player is always doing the exact opposite of what retail traders are doing in most of the cases. So that's something you need to keep in mind. And once this level breaks, you have two people entering the market. The first ones are retail traders that are were long, so that were long in this area. They put the stop below the low or the level. That's what they've been taught. And they will get hit, and that means there is sell liquidity, because a buyer stop loss is a sell order. If you buy, let's say, if you buy at this price, your stop is over here. The loss is being caused because you sell back your order at a lower price, and that's what causes the loss. So if someone buys and a stop loss gets hit, it's a sell order. So these are people that are forced to sell. Next to that, there are also people that are actively selling because of the breakout to the downside. So in this area, you get a lot of selling. And this means there is enough liquidity for the bigger player to go long. Because if there's not enough liquidity for the bigger player, you will simply push the markets away, because for every buyer, there needs to be a seller. And if there are only 10 buyers at a certain price and these buyers are only buying 100 lots, and this big guy has an order of 1,000 lots, these lots don't get filled at the same price. They get pushed to the upside, which causes a worse fill price, and that's something he wants to prevent. And he does that by triggering liquidity and by absorbing the liquidity. So that's why it's so important to know this concept and join the bigger player, because if you don't have any chance at succeeding at all in trading. So you need to mark out the important spots. And if I go back, if I clear my chart, I will show you how it's done, but it's basically mark out ranges and important swing points. As you can see, this was one too. Look at the reaction we got to the downside once this high was made. Very, very strong. You really want to only mark out the important ones, the important swing points to the markets. Those are the best to trade at. Look over here. This high was created and a massive down move. Once this high gets hit, look at the reaction. Once it's breaking the high over here, look at the massive move to the downside. Again, people are buying because there's a level forming over here. People will be buying the breakout, which is buy side liquidity. And what does someone need that wants to sell a big amount of order? He needs buy side liquidity. So once again, the level breaks, it rejects quickly, and we get a move to the downside. And this happens over and over again. This happens on any time frame you can imagine. So you really learn about this, really try to catch it, try to mark these things out. This is one of the things I use in my trading strategy. There is a lot more, but this is just one of the concepts that I wanted to explain, because I just took it trading gold yesterday because of this concept. If you guys have any questions or want a chart to be analyzed, please type it in the chat. Everyone can type in the chat, so I'll be waiting for your questions. US 30. Let's see if my broker, yes, there it is. I personally don't trade the US 30. I do invest in indexes for the longer term. The US 30 is one index. The most important things I notice about this chart is, once again, a concept I use in my trading. It's called, I call it the last high pre-breakout. And that's this area. Some people will call this demand. There are a lot of ways people describe these things. I call it the last high pre-breakout. And what it basically means is the last bit of resistance before a breakout, before a break of structure. And these are very important spots to the market, because these are the places that the market usually likes to retest. And as you can see, this is a very strong and important place to the market, because look at the move. Look at the move. This cannot be caused by someone like us. This is a big investment bank, a big player investing over here. And I always mark out these levels, and I want to see what happens when these places get retouched again. Is the bigger player still active there? And as you can see, there has been a very big reaction. This was during the beginning of the Corona pandemic. But let's zoom in. On the longer term, I'm definitely bullish on the indexes. mainly because the economy is there are always new things that are being created. That's why I heavily invest in stocks, a lot of US stocks. But let's look at the chart. I don't really see anything that matches my strategy, but what's important to notice is that we just had a break of structure. So we look on the weekly, we just broke the high, which is a very important high because this caused the massive move to the downside. But the main thing is this important swing low got broken. This one, it got broken and strongly rejected, I'm sorry. And look at the up move. This is the work of a big investor. This is not someone with a low capital. So this means there is interest from bigger players to be long, but I don't see any trade entry right now. So yeah, long term, definitely bullish on this one, but I don't see any entries. Here is a lot of structure. So if I would trade this, I wouldn't be entering right now, but I want to see a clear break of structure, then a few days holding above, possibly a retest, and then a move to the upside. But I do have a bullish bias, just not an entry right now. GBPUSD. Let's take a look because that's a very interesting chart. Let's see where I have it. GBPUSD. There we go. So I always start with looking at the long term, and long term GBP I am definitely bullish because look at this. There were two very important lows to the market. Both of these lows got broken and rejected very aggressively. This means there is someone with a lot of capital scaling in a long position. If you are familiar with Wyckoff's work, let me get a picture about Wyckoff's work, but then you know what's happening here. All right. This is Wyckoff's work, and as you can see, we are clearly in a accumulation phase. This was your selling climax, which is a strong move to the downside, followed by a change in character, which is the strong move to the upside. Then we got a few tests creating liquidity, then the spring or the false break to the downside, which was over here. Now we can expect this level over here, which is this level on the chart, to break to the upside. Create a retest. So I expect a bullish move, long term, very long term, and then a move to the upside. That's basically my bias on this pair. If I zoom into the lower time frames, to see if there is a potential entry. I don't see anything right now as far as entries go, but it looks very, very bullish. We do have an open gap, and as we all know, gaps almost always fill. I believe 98% of the gaps fill. Most of them fill within the same day. That didn't happen here, but open gaps usually fill. Doesn't mean you want to trade into the gap. But I definitely see GBP taking out this high today, then a retracement to the downside. If I wanted to trade this, I want to see a break of this massive level, which really confirms my bullish bias. And then I want to look for longs targeting this high, and the next target will be this high. Why will these be my targets? Very simple. These two created a massive move to the downside, as you can see over here and over here. So these will be my targets if GBPUSD breaks this massive level, gets a retest. It will still mean it's bullish, even if it goes down to this low and takes it out and rejects it. I'm still bullish because these things happen. This is an important swing low to the market. There will be liquidity here. So this is an excellent place for people to get trapped and for bigger players to get more longs in. So I will first be looking for a setup above this blue level. If it fails, I will be looking for this price action over here, and then potentially scale in longs to target at least this level. That will be the first target. Anyone else have any questions about risk management, journaling, backtesting, anything? You can ask me anything. How to use a fib? All right, that's a basic question, but it's a good one. I personally don't use fibs. As you can see, my Fibonacci levels are not accurate. These are just things I use to backtest and create targets. But the main thing you want to do when using a Fibonacci level is only use the important swing points. I see many people using Fibonacci on every single swing there is. And then, yeah, you will always find a Fibonacci level that lines up with your idea. And that causes losses. You really want to only go for the big swing points and use the most important Fibonacci levels, which usually are the 61.8 and the 50s. And that's where you want to look for confluence. You can really use Fibonacci as a confluence tool, but I don't think it's something you should trade on its own. It can be very helpful. I know a few traders that use it successfully, but you really want to aim for the most important swing points to measure them. Right, I want to show you guys something. The main part of my strategy is based on statistics and numbers, which means I do a lot of backtesting. I don't trade based on just drawing lines. I trade based on statistics and numbers and based on liquidity. And this is just one of the projects I have done in the past. It's very, very, very detailed. It shows me exactly when the odds are in my favor, when they are not, when I should risk more, when I should risk less. And it's really, really helpful to make trading decisions. I do have this sheet for every single pair I trade. The ones you see in the bar below, these are the pairs I trade. I don't trade any more pairs than this. On every pair, I do have statistics about certain things happening in the market, and I only trade when these things happen and when the odds are in my favor. Because a lot of people, they just draw a line on a chart, maybe a trend line, and when it breaks this short, but does it really put the odds in your favor? You have to ask yourself that question. And I wanted to know if what I'm doing puts the odds in my favor. So I tested everything, and it took me a lot of time, but right now I'm profitable. I know why I'm profitable. I know when I should risk more, etc. And it really gives you a massive confidence and a massive edge above other people. So if there's one thing you take away from this webinar, it is know why you deserve to win, know why what you're doing works, know why it makes money, and you do that by testing things out and keeping track of things. All right, are there any more questions? GBP is moving nicely to this level as expected, because this is where the liquidity is. Euro dollar is moving up. I have a trade on this on my other MT4 because I use one for analysis and one for trading. This way you cannot fuck up with your orders. You can just put the order in, close it, and if you want to look at the charts, you simply look at the other MT4.
Kathy, what you want for Christmas? I want $48 million.
Let me take a look at the pound. Let me remove the FIB first. What is the perfect time to use to get entry on trades? That's very simple. There is no perfect time. It's all about, well, some people say it's during London session. I don't trade during London session. I trade on the daily and the hourly chart. I don't care which time I'm trading. I just trade my setups. But you have to figure out the best time for yourself. Usually the most movement is during London. But if you have to go to your job during London session, you simply don't want to be trading. You only want to trade when you have time. So you need to figure out if it fits your daily schedule and only trade then. Because I see a lot of people, they say, I want to trade during London. They are at work, they grab their phone to trade, and that's just not how you do it. Do you really think that the professional traders at the bank are trading from their phone? Of course not. They plan, they sit behind the screen, they analyze, they know exactly what they're doing. And if you want to have any chance of winning at this game, you should treat it as a real business and be professional about it. So there is no perfect time. Find a time that fits with your life and trade during these times. Please quickly go through your top-down analysis and execution. Explain how you get a directional bias. That's a very good question. Let me clear this chart. So my directional bias comes from the daily charts. I will get the daily and the weekly. I will get a gold chart because there is trade I recently took, which was on this day. So it all starts with the directional bias, and I start on a daily and a weekly. And what I look for is, like I said before, liquidity and supply and demand. And as you can see, this level was very, very important to the market because it created a very strong rejection and not move to the market. This is caused by a bigger player. So I want to see, once that level gets hit, if this bigger player is still active, if he's still watching this level. And as you can see, price got to this level, it broke the level, which triggered some liquidity, but we got some rejection there. And as I look on the hourly time frame, I get my trading setup, which is a accumulation pattern. It's a Wyckoff accumulation pattern. So the directional bias is I create the directional bias by looking at the daily and weekly, analyzing supply and demand at key areas, key swing points, and key support and resistance levels. Once I have a bias and the statistics are in my favor according to my backtesting, I look for an entry on the H1 and I look for confirming price action. And as you can see, this is confirming price action to me because all the lows get broken and rejected. Then we get a break of this level, and this is always my entry, always. So yeah, that's basically how I go from the higher time frame to the lower time frame to my entry. My entry is always at the breakout. I don't wait for a retest because I noticed for myself that I often miss moves. So a false break of a level and then a follow through to the upside, indicating that there has been a bigger player accumulating. That's where I enter because I want to join a bigger player. My target is always based on my statistics, which I won't be sharing. Simply because I don't want to give my entire edge away and I don't want to tell anyone what to do. You have to find some concepts and then test it for yourself because everyone is different. So that's basically how I do it. What confluence factors do you use? The confluence factors I use are false breaks of lows and highs, accumulation patterns, statistics, and yeah, that's basically it. I don't use any conventional technical analysis because everyone uses it and everyone loses money. It's that simple. 95% of retail is losing money and they all use the same tools. So why should I use the same tools if I want to make money? It doesn't make any sense. I don't draw any trend lines. I don't draw any fibs. I just look at what the bigger player is doing. I combine that with my backtested statistics, and that's it. It's that simple. I don't want to do the things that everyone is doing and everyone is losing money. That's not the way to approach it. How much money do I need to trade successful? That's kind of a personal question to yourself because trading successful is different for everyone. The best way to do it is, I would say, start with a small account, maybe €1,000 or something. Build a track record for at least 6 months. And then once you have a track record, go to some firms, apply. This can be done online. And basically show what you can do, and then most of the time people will be willing to give you some capital. There are also these online prop firms, there's private investors, but the route I took is to build a track record and to apply for some firms. And the money you need to trade successfully, well, if you want to trade full-time, you need a lot of money because there can be a lot of months, let's say from a year has 12 months. You can easily be down for 4 or 5 months and you still need an income these months. So you need a lot of capital because you want to make enough money in these 8 months to cover the entire year. So that's something you need to think about. The best way to go about it is to have more income sources. I do have 3 sources of income. So if I have a bad month in trading, I still have money to pay my bills. So $100 is not enough, and no, it's not enough. You really need, well, it's good to learn some concepts and to get a feel for trading, but $100 is never enough to build an entire career. How can we know how the big players took direction of the market? You can know that by analyzing supply and demand at key areas, which are swing lows and swing highs, important ones, and by analyzing ranges like I said before. I do have a YouTube channel on which I talk more about this. The YouTube channel is basically this. If you search for that, you will find my YouTube channel. I also have my own company, which is this. On my website I also post a lot of blogs which can help you with trading. So I really want to put an end to this webinar. If there are no further questions, can you show us a little strategy in Forex trading? Well, I already spoke about a lot of concepts in this, which is the Wyckoff method and the liquidity. I won't be giving away my entire strategy for 2 reasons. 1, because you won't be able to follow it because it doesn't fit your personality. 2, because I don't want to give my edge away. Building a strategy is done by learning concepts that you understand and that fit with your personality, and by testing things out. So the concepts I explain in this video, try to learn them for yourself if you like them, and build a strategy around those concepts. So I want to put an end to this webinar, and I hope you guys learned a lot. If you have any questions, feel free to contact me on Telegram. My name is @thecompositeoperator. You can find me, you can contact me via that. You can also join my channel, which is, I will post weekly updates in my channel. So I hope you guys learned a lot and maybe speak to you guys next time. And thanks for watching.